One of the fastest ways to become a profitable trader is to treat your trading like a business. Yes, like your business. Now, a lot of people do not understand this, nor do a lot of people incorporate this into their trading. I see so many traders just wake up, open an account, buy, sell, just take on trades without any proper structure, without any proper plan, and that ultimately leads them nowhere. And in this video, what I ultimately want to talk about is how to treat trading like a business and what the steps are to do so. Before diving into how to treat trading like a business or what the steps are, the first thing I want to put together is how trading and business are relatively very similar. So imagine you open up a restaurant, and in that restaurant business, you're going to be focused on what you're selling, what food you will be serving, and what the location will be, how much investment you're going to make, and you're just going to start looking at these different data points and have its proper structure to give yourself the highest level of success. So this is the same thing that we want to do in our trading, and if you're not doing this in your trading, you will have a very low chance of being profitable or making it here in the long run. So now there are 3 steps that we want to focus on to make our trading to be correlated as a business. Going on number 1, having a business plan. Now, what does the business plan or trading plan consist of? So let's start going over the questions that should be asked in trading game or your business game plan to give yourself a strong foundational aspect that you need to be a profitable trader. Also, to see more content, check out our Telegram channel and other videos here. All the time, we try to give you free educational content that will save you a ton of time, energy, and obviously money. So let's start with the first one, the markets you will trade. So you want to understand what markets are you going to trade. Are you trading the crypto market? Are you trading the stock market? Are you trading futures? Are you trading forex? Like, what are you going to trade? Now, I see so many traders go and trade crypto, trade forex, trade stocks, trade options, futures, trade everything. Then they start out, and I'm like, well, this is not the time for you to pick multiple markets. Pick one market, become really good at it. So that's the first thing. You want to structure the whole business around what direction your business is going to go in. So pick a market and identify what market you want to trade, and if it changes in the future, that is okay. But we want to create this business around one structure that we can build off now, so we're not confused and nor are we all over the place. After you understand what market you want to trade, now you have to go into what assets you want to trade, right? So if you're trading, let's say forex, what pairs do you want to trade? If you're trading stocks, what types of stocks do you want to trade? Do you want to trade high mid-cap stocks? Do you want to trade blue chip companies, right? Do you want to trade options of these stocks? Do you want to trade the future markets? If you're trading future markets, do you want to trade micro contracts? Like, what type of contracts do you want to trade? Like, these are the things that should have a foundational understanding of before you even begin to trade them. So if you don't even have a foundational understanding of many of these markets or any of these asset classes, then you need to learn about that first before you even pick. Why? How much are you planning to invest or trade with? This is a very big question you have to ask yourself, and everyone watching this will have different answers based on their financial situations right now. I'm not saying if you're starting from scratch, you need to start with a lot of money. Start with something small just to get a feel of the market, just to get a feel of your business, right? So, because you don't want to start a business and expose yourself with the most amount of risk. You want to start a business, see what works, see what doesn't work, and then slowly start putting more money in. But that is a question you have to ask yourself that is applicable to your financial situation. What is the amount that I'm going to start with? And is that an amount that I'm comfortable with starting with? So, for example, if you're starting, and let's say you're starting with the $5,000, and that $5,000 is all the savings you have, I wouldn't recommend to put all of that $5,000 in the market. Why? Well, because a lot of your emotions are going to start playing a role in positions you take, trades you take, and you're just going to keep thinking about, oh my god, this money I can't lose. So that attachment to money will make it harder for you to take on trades. So I would personally probably go with the lesser amount that I'm comfortable putting in the market, so I don't have that emotional connection with in terms of financial connection. Okay, so once you pick that number, you have to stay stuck on that number for the next 6 months and say, you know what, I'm starting with $2,000. I'm starting with $1,000, and I'm going to stay consistent with this amount until my business starts seeing some consistent growth and I start seeing some results. I will not look to add more money, which leads me to next point, which is after you have identified how much money you will be investing into the market, you want to understand how much money will be risking per trade. This is the main thing that is going to separate you from people or trades that blow their accounts. This is risk management. How are you protecting your downside? And I'm really focused on this part because, guys, if you really want to make it in this game specifically and long term, and you want to survive, you have to protect your downside. If you don't protect your downside, if you do not have a proper risk management plan, you will make it really difficult for yourself to make it in this game for the long run. Now, in order to do that, once you identify how much money you have and how much money you're risking and how much money you're investing in the market, you want to try to work off that 1% or 2% rule. So, for example, if you're investing $1,000 into the market, the 1 and 2% rule essentially says that you will not risk more than 1% of your total account in a particular trade. So, if you take a trade tomorrow and with $1,000, that 1% rule will allocate you about $10. So any trade that you take, and you are not allowed to lose more than $10 on that particular trade, especially then you're just starting out. Obviously, once you get ahead in trading and you get more comfortable, you get more consistent, you can increase your risk aspect. But starting out, guys, just think about it. Why would you want to put out so much risk then you don't understand the market dynamics? You don't understand yourself, you don't understand what parts of the business are going to be good, what parts of the business are going to be bad. So that is going to take some time. So once again, allocate a small percentage of risk, and whatever that risk percentage is, keep it consistent. Because if you can maintain a small risk per trade and keep that consistent, you will still be here in a year or 2 years, because you will make it easier for yourself to take losses over and over again, because they will be so minimal. Because I see traders with $1,000 account risking $500 a trade or risking $800 a trade, and then 1 or 2 trades they blow off their account. Before we dive deeper, remember that our Telegram channel offers more than just educational content and guides, and all of the materials comes first in this channel. Now, the most important part about your business plan is your strategies, your playbooks, your setups. What do your strategies look like? What does the playbook essentially look like? How do you think about the market? Like, what time frames are you trading under? Because you can't go and say, well, I'm going to trade options in the stock market and I don't know what time frames I'm trading. For you to know what time frames you're focused on, you need to focus on what type of trader you are in terms of your strategies. Are you scalping? Are you getting in and out of positions very quickly? Are you day trading where you're holding positions, for a couple of minutes or maybe a couple of hours? Are you swing trading where you're holding positions for days and days or maybe weeks and weeks? Or are you position trading? What type of trader are you? And within that understanding of what type of trader you are, it goes into what type of strategy you will use to identify the time frames you're focused on, that will identify the methods and focus points that you are kind of paying attention in the market. Are you trading off basic price action? Are you using any indicators? Are you trading on order flow? What are you trading off? So all of this starts off from the top as mentioned. Once again, what type of trader you are, how you want to change in the markets, going into the time frames, going into strategies. This whole concept is very important for you to incorporate into your trading plan. You can't wake up one day and say, well, today I'm going to be a swing trader, and the next day you're a scalper, and the next minute you're a day trader. No, you want to try to focus on one way of trading, get really good at it, and once you get really good at it, you can incorporate more strategies and setups surrounding it. It will make your life a lot easier because you'll know what's working, what's not working, what needs to be fixed, and what needs to be improved. Then the next part about your trading plan is going to be preparation. How are you preparing for the trading day? How are you preparing for the trading week? How are you preparing for the trading month? Like, what are you doing in order to prepare? Are you waking up 30 minutes before the market opens and then you just jumping in front of your computer and saying, well, I'm going to start trading? Like, is that your preparation, or what is your preparation process like? You should have a preparation process there. You wake up and you're reviewing. Maybe you're going over some key levers in the market. Maybe you're going over some fundamentals. Maybe you're going over some news that you want to be aware of that are happening in a particular day. Or maybe you're reading up on some reports, you're going over the economic calendar. Whatever your preparation is, you need to have some sort of preparation. And once you have that preparation plan put together, you want to have the preparation plan be consistent every single day. I cannot stress this enough, guys. You don't want to wake up every day and have a different way of preparing for the market. Have a very consistent way of preparing for the market that you use every single day, and you repeat that process over and over again until it becomes almost second nature to you. So that's your trading plan. Now, if you want me to dive into trading plans in a lot more detail, I can dive into trading plans. So just leave a comment below and let me know if you guys want me to do that and explore more about the trading plan, and I'll show exactly what the trading plan looks like. The second point I want to make about trading like a business is you need to have a trading journal. What do I mean by trading journal? This is the main part that's going to help you to understand what are you doing well and what's working, what's not working. And I'm going to dive into a few things that you should have in your trading journal and the things that you should be paying attention to, and why having a trading journal is so important. So let's start off with having a trading journal and why it's so important. You can go back to each trade and see what went wrong, what went right, what mistakes you made, and what you did well, and what you could have done better. This is very important because if you don't have a trading journal, you will never be able to know what mistakes you're making, and you're just going to keep making the same mistakes over and over again, and you're going to keep losing money, and you're never going to understand why are you losing money. So you need to have a trading journal. You need to be able to look back at your trades and see what went wrong and what went right. So what should you have in your trading journal? Number one, you should have the date of the trade. You should have the ticker on the asset that you trade. You should have the time that you entered the trade and the time that you exited the trade, the price that you entered, the price that you exited, the size of the trade, the reason for entering the trade, the reason for exiting the trade, and any other notes that you have to put around the trade. Now, this is very important because you can go back and see, okay, I entered this trade because of this reason, and this is what happened. This trade didn't work out because of this reason, and this is what I could have done better. So having a trading journal is very important because it allows you to go back and see what went wrong and went right, and it allows you to learn from your mistakes and improve as a trader. Now, the third point I want to make about treating trading like a business is you need to have a review process. So what do I mean by a review process? You need to have a process. There you go back and review your trades, review your trading journal, and see what went wrong and went right, and what could have done better. This is very important because if you don't have a review process, you're never going to learn from your mistakes again, and you're never going to improve as a trader. So you need to have a review process where you go back and review your trades, see how it went, what was right and wrong, and especially how you could have improved that. So those are the three main points I wanted to make about treating trading like a business. Number one, you need to have a trading plan. Number two, you need to have a trading journal. And number three, you need to have a review process. If you can incorporate these three things into your trading, you will give yourself a much higher chance of being a profitable trader and making it in the game long term. So I really hope that you guys found this video helpful, and if you did, please give it a thumbs up, and if you have any questions or comments, please leave them below, and I'll be happy to answer them. Thank you for watching, and I'll see you in the next video. Also, check out our Telegram channel, because major useful materials and market analysis are posted there. If you want to become a better trader or just be in a context of the market without spending hours reading news, check our channel and other videos.